Gold isn't just a shiny metal, it's humanity's oldest obsession. This year alone, gold has outperformed giants such as Nvidia, Apple, and Microsoft, climbing over 50% since January. From the ancient Egyptians to the Roman Empire, gold has stood a timeless symbol of power, wealth, and security for over 5,000 years. Even after the US abandoned the gold standard in 1971, investors never stopped chasing it, because every time the world gets shaky, gold becomes king again. Starting this year, 2025, at $2,640 an ounce, it has since then crushed the 4,000 price level, a price never seen before in the history of gold. Normally, the price of gold rises as the stock market falls, as it's known as a hedge against inflation and any type of uncertainty in the market. But these times, something strange is happening. The price of gold is reaching record highs alongside record-breaking stocks. So what's going on? Behind the excitement of a booming market, a quiet storm is slowly brewing in the background. Inflation has been eating away at the dollar's value since the start of the pandemic, and working-class families are struggling to maintain and catch up with these rising prices. And at the same time, these new tariffs are straining global trade, and major trading partners such as China, Canada, and India are starting to move away from the US dollar. That in turn is driving demand down for our US dollar, which directly lowers the value of it as well. And when the dollar weakens, gold shines even brighter. And with the Federal Reserve cutting interest rates, treasury yields and bond yields are falling. So investors are looking everywhere, even just anywhere, for assets that can hold real value over time. So if your cash is losing value and your bonds are paying less, where do you go? The answer is gold. So why are so many investors turning to gold, and why is the price at a new all-time high? Gold has always been known as the ultimate store of value. When currencies weaken, when markets panic, and when trust fades, gold tends to hold its ground. It's one of the few assets not tied to any government or corporation, meaning it doesn't default on payments, it doesn't go bankrupt, and it doesn't rely on financial reports. Gold also moves independent of the stock market. So when stocks crash like in the 2008 financial crisis or the 2020 COVID pandemic, we can see the price in gold starting to spike. That's why investors see it as a kind of insurance policy for their portfolio. When things go bad, gold tends to go up. And even beyond individual investors, central banks in major countries are starting to load up on the gold reserves. Countries such as China, India, and Turkey have been buying record amounts of gold to fill up the reserves and reduce their reliance on the US dollar, which is widely seen as the top currency used for international trade. Those countries see what's happening with sanctions and shifting global powers, and they want protection. The truth is, gold is easy to liquidate, widely recognized across the globe, and backed by thousands of years of trust. It's not just pleasing to look at, it's psychological security in a bar. But this time something very strange is happening. Gold is soaring alongside the stock market when normally one goes up and the other tends to fall. But right now both are setting records. We're seeing what economists call an everything rally, when stocks, cryptocurrency, real estate, and commodities such as gold are soaring together. That usually happens when there's a lot of cheap money in the system. And there's several current factors that have been contributing to that. With the Federal Reserve cutting rates, treasury yields have been dropping, holding cash or bonds doesn't pay as much as it used to. So investors are pouring money into what they seem can bring real value, from tech stocks all the way to precious metals. And even though markets look extremely strong, deep down, investors are hedging or protecting their bets on the market. They want the upside of stocks, but they're quietly buying protection, and that protection is in the form of gold. Now, add in a weakening dollar and rising global tensions, gold almost becomes a fear trade and a FOMO investment at the same time. Fear of missing out. So let's put this into an example to easily digest it. Let's say you're a homeowner. You recently started doing a lot of renovation projects and you're pouring lots of money into your house, increasing that value. But at the same time, you're increasing your homeowner's insurance by a lot more coverage because you're expecting a fire to come over any day now to burn it down. Hopefully not, but it's something to be worried about. That's what's happening on a global scale. With rising inflation, rising trade tensions, and general uncertainty in the market, that's essentially what people are doing, protecting their investments. And it's also interesting to note that similar sentiments in the market were held in 1929. the infamous year of when the Great Depression started. Back then in the 1920s, investors believed if you throw any type of money in the market, you're bound to get a return. And it almost seems like that today. With everything reaching record highs across all categories, it almost seems like you're bound to win. Talks of a bubble have been increasing over the years, especially during the last few months, as major tech companies have been taking over the market, and with much recently Nvidia reaching a $5 trillion valuation, never once seen before in any history of the stock market. That's just something to keep in mind though. But for all the excitement, gold really isn't the perfect investment. First, it doesn't produce anything. Gold doesn't pay dividends, it doesn't offer interest, and it doesn't compound over time. In other words, it's not creating wealth, it's preserving it. And with prices up 50% just this year, some analysts such as Bank of America are warning that gold is in what they call an uptrend exhaustion. That means we could possibly see a pause or even a correction in the next coming months. And even since last week, since it reaches record highs of 4,300, it has since then dropped 10% from people taking profits everywhere. And remember, speculation surges can reverse just as quickly as they rise. And at the end of the day, gold is simply just a piece of metal. Its value comes from what we believe it's worth, not from cash flow, not from innovation or productivity. And initially it only came into value because of its rare natural color and the ability to not corrode, which looked appealing in jewelry and other applications. So without driving numbers, it simply just sits there. Although I can't lie, I'm absolutely in love with my necklaces. But again, other than just being a necklace, it doesn't transform my life in any way, shape, or form. That being said, that's some of the reasons why we see gold breaking record highs and outpacing the stock market, which 9 times out of 10 it never does. Thank you for letting me be your young advisor today, and I hope you learned something valuable. Let's all get rich 2025, and understanding how to hedge investments and what gold serves in an investment portfolio can help you get there. Once again, thank you for your time, and I hope to catch you in the next video. Have a great day.